Tax season is upon us, so you may be thinking of purchasing a new car with this year's refund. But before you do that, in this episode of Headlines in Fine Print, we're going to talk about all those extras. Hello and welcome to Headlines in Fine Print. I'm Dion Williams, President and CEO of Piedmont Advantage Credit Union. On today's episode, we're going to talk about all those extras that come with the purchase of a new car. And it may not be a brand new car, it may be a car that's new to you, but this is a really good time to talk about it because a lot of folks see that tax refund season as the opportune time to have a little money for a down payment and to go see what the new year models look like. But before we get into that, again, just want to remind you that we have our shows archived on YouTube and Spotify, so you can get this episode or past episodes if you'd like to listen or listen to or watch those. And also feel free to like, follow, or share if you're so inclined. Now, I want to preface our content before we jump into some of these extras that this is not an all-inclusive list. The last time I purchased a vehicle was a little over a year ago, and I couldn't keep up with all the extras that are available today. So I'm going to hopefully do a little more than scratch the surface with some extras that are available. But if you go to buy a car, you may be offered items that are not touched on in this episode, and that doesn't mean it doesn't mean they're brand new items, just they're always thinking of something new to tack onto the car. And of course, the fine print in all of that is these add-ons are not free. There's a cost to it. So with the ones we're going to cover today, my goal is to educate you on what those are and give you the information so you can make an informed decision as to whether these options are right for you or not. So first of all, we're going to begin with GAP, and GAP is Guaranteed Asset Protection. Now, I can tell you as a consumer, I'm not a person that loves to have a lot of add-ons when I'm purchasing a vehicle, but GAP is one that really could make a lot of sense for many people. And here's why. So many people are upside down in their vehicle. And you may have heard, and it's true, the moment you drive a new vehicle off the lot, depreciation automatically kicks in. So if you're upside down in the vehicle, what GAP does is it protects you. Let's say that your vehicle was a total loss, and so it covers that area between what you owe on the loan versus what you owe on the loan versus the value of the vehicle, and you're upside down in that let's say you owe $25,000 on the car, but the car's worth $20,000, and that GAP is going to cover that extra $5,000. So that's one of those that I really do believe there's some value for. So make sure you're aware of what the car is worth and what you owe on the car, and know that if you have a total loss on the vehicle and you're upside down in equity, so to speak, the lender is still going to expect you to pay that difference. So let's say $25,000 owed on the loan, $20,000 is the value. The vehicle's totaled, you get $20,000, that $5,000 remaining, the financial institution is still going to expect you to pay that $5,000, and GAP would make that up for you again. So GAP definitely has a time and a place, but let me give you a pro tip on GAP. It's not created equal everywhere you shop, and I'm talking about the price. Dealerships usually have a larger markup on GAP than the financial institutions if you finance directly with them. So it's okay to shop around on this if it's something that you feel like you need. Be sure to ask those questions as to how much you're paying on it, because again, the extras can add up and then they get tacked onto your loan amount, and sometimes the extras can be what takes you over the owing more on the vehicle than what it's worth. So do your homework on GAP, but again, it's one that can really make some sense, especially in recent years. You've seen that car values have gone up and cars are more expensive. And then if you're trading in a vehicle that's not paid for and you're not getting what you want on the trade, it just makes sense to do a little homework on that and position yourself. You hope for the best, but position yourself to protect yourself against the worst. Secondly, and these next three we're going to talk about, I'm going to take kind of an a la carte approach to, and then I'm going to talk about a fourth that's somewhat of a bundle of those three. So let's begin with credit life insurance. Credit life insurance protects the loan only. So let's say you buy a car, you take credit life out on it, you finance the car for 5 years. When the car's paid off, whether you pay it off in the 5 years, you trade it in before then, when that loan expires, that's when the credit life expires. Now, from personal experience, I will tell you that term life insurance is one of the least expensive kinds of insurance out there. And I personally carry a policy that's term life that is enough to cover, car loans, mortgage loan, other debt that's out there, and that may be a less expensive option for you. Again, the credit life, it's going to add a little bit to your monthly payment. It protects you on that loan only, but you may find that you can get something that's more cost effective, that gives you broader coverage for a longer period of time than just taking credit life out on that car specifically. And that's going to take us to credit disability. So with credit life, it's going to pay off the loan if something happens and you're deceased. Now, credit disability, it's not paying off the loan, but it's going to assist you with the payments during the disability period. Now, again, this is one to do your homework on it. You may have short-term or long-term disability through your employer, or you may have a policy out there on your own. Now, generally, disability policies do not totally replace your income. It's usually a percentage of income, so you're operating with less. But the credit disability product helps you with your payments on that loan specifically during a period of disability. So just do the cost-benefit analysis. Do you have any types of disability coverage outside of what you would be taking on the loan? And do the amounts that you have help you pay not only the car loan bill, but the totality of your financial picture during a period of disability? The third one is unemployment insurance. So unemployment insurance covers if for loss of job. And let me stop right there and say that that does not cover quitting your job. So it would have to be a layoff or a termination, something that's you're involuntarily off your job, and it would help you with payments for a period of time till you found another job. So again, there's a benefit for that. Now let me give you another pro tip on this one. And this is going back to probably countless shows we've done over the past year. If you have an emergency fund established, that can eliminate the need for really the disability or the unemployment. And a lot of times, a good emergency fund, if it has 3 to 6 months of either take-home pay or enough money to cover expenses, that would get you through a period of unemployment, for example. And that way you're not having to pay for coverage because you've got the savings set aside and you're earning interest on it. But unemployment is something that's offered as a coverage when you take out a car loan. So now we're going to transition to the fourth one. I talked about the three that were kind of a la carte, and this one's where you kind of put them together. This is the more general blanket of debt protection. So debt protection, depending on who's offering it and how it's structured, you could pick up the benefit of life, disability, and unemployment in one type of policy, instead of trying to say, well, statistically, is it a higher probability of me passing away or becoming disabled or losing my job? This one kind of gives you protection in all three realms, so kind of the best of all worlds. So think of debt protection as your bundled option in the insurance realm on your loan coverage. And again, with all of these, you just have to do the cost benefit analysis and think about what's the probability and what's the affordability of this coverage relative to what your car loan payment is. And of course, if you've ever sat down at a dealership to finance a car, they don't ask you how much do you want to pay. They'll ask you what type of payment are you looking for, and then they kind of work backwards from that payment for the payment on the loan with any and all extras that you add to it. So be sure to control that conversation and be sure to ask the questions, do the homework that you're getting the coverages that fit best for you. And the last type of coverage we're going to touch on today, and again, as I said at the beginning of the show, I'm not covering every offering under the sun because this would be a much longer episode, and I would still probably leave something out. I'm trying to educate on some of the more common ones. But the last one is depreciation protection. Now, this is kind of the flip side of GAP. So remember, with GAP, if you owe more on the loan than what the vehicle's worth, GAP protects you there. Depreciation protection, it protects you if you owe less on the loan than what your true equity in the vehicle is. So let's flip the numbers. Let's say that you owe $20,000 on the loan and your vehicle's worth $25,000. If you've ever totaled a car or had serious damage done to it and dealt with the insurance companies, you know that that's not an easy battle to win, that you're probably going to come away with that feeling like you were not given the full amount that you felt like the car was worth. So this protection kind of comes in there and protects you in that regard, that if you don't get what you feel like on the insurance and you justify what the value of the vehicle is, it protects you on that equity. So again, depreciation protection is kind of the flip side of gap. In terms of our closing thoughts for today, I hope this has been very helpful for you. Again, income tax season is upon us, and a lot of folks see that as a really good time to purchase cars, and dealerships often will offer specials during this time of year, closing out previous year models and rolling out the new year offerings with the latest and greatest bells and whistles. And again, these offerings doesn't just apply to new vehicles. It can apply to a used vehicle, or as we'd say, a vehicle that's new to you. So we talked about gap, depreciation, coverage. We talked about credit life, credit disability, unemployment, and the more bundled option of those three of debt protection. So thanks so much for tuning in for today's episode. Again, if you're so inclined, like, share, follow us. We're on YouTube and Spotify, and we welcome your feedback. You can reach me at dion.williams@pacu.com. That's dion.williams@pacu.com. And my number is 336-750-7088. If you have any questions about today's episode, any questions or requests for future topics, happy to discuss any or all of that with you. And of course, we'd love to have you as a member of Piedmont Advantage Credit Union, so you can come to any of our 6 branch locations, or contact our call center, or our member relationship team, as we call it, or visit us online at pacu.com. And we're having a new website that's going to be launching later on in the month of February. So thank you again for tuning in for Headlines in Fine Print with Dion Williams, and we'll see you next time.